Joining me for more on the market and the economy is Cantor Fitzgerald CEO Howard Lutnick. Howard, it's good to see you again.
Great to see you back in the Americas.
Back in America, right. So we were in Davos together, and you were on my panel on commercial real estate. And I guess that through your lens, you're chairman of Newmark, huge commercial real estate player, CEO of Cantor. You're looking at capital markets and real estate, both of which have been hit really hard lately. So I feel like you're pretty negative. Is that right on the outlook?
Well, look, interest rates going up is tough for real estate today. But of course, we all know that you make your money on the way in. Choosing the moment to invest is the key to making money and investing, and the opportunity is coming in real estate. So I think starting this summer, when real estate reprices, you're going to see so much money moving to commercial real estate. It's really going to change the outlook. But I do agree, it's going to take a while, a couple of quarters.
Why? What are you eyeing this summer? Some might think that time is coming sooner if mortgage rates and Treasury yields have indeed peaked. We're way off the highs.
No, you know what? That was what's so interesting in Davos. So the market's saying that there's going to be cuts coming. Cuts in the second half of the year and cuts in 2024 by the Fed. And that's what the markets are saying. But everyone at Davos, and it was scary because everyone kind of agreed, people like me saying rates are going to stay high. They're going to stay at 5% all the way through that. So I just don't buy this cutting stuff. I don't think the Fed's cutting into a recession. I think we're going to have a light recession. But I just don't buy these cuts coming. I think rates are going to stay up. I think real estate's going to have a tough next couple of quarters. And then it starts to come as rates stabilize and people get confidence in that stability. I think you're going to see real estate start to rally. And that's the time to buy. That's it.
Are you talking public sector REITs? Is that what you would tell people to buy?
Look, public sector REITs, you can see them, they're down 40%. I think they got another leg to go down, right? When people realize when the 10-year stops being 3.46 and goes back to, closer to 4%, I think they're going to take another leg down, and that's the time to buy it. So I like real estate. I like opportunity funds in real estate, distressed real estate, public REITs, but not till the summer. Let them take another leg down, and then it's time to go.
But it's not just high rates that are working against commercial real estate, Howard. There's an office problem, and it's getting worse as places like San Francisco have companies that are shifting to permanent work-from-home policies. The glut of commercial office space in this country, isn't that getting worse?
So remember, when you say commercial real estate, you're getting a lot of categories. There's multifamily in there, which is doing well because rents are going up. There's industrial, there's senior housing and alternatives, other housing. So just talking office, we agree.
Yes.
So here's an interesting thing. The best new buildings in office have never had higher rates, never had rents this high, and they are on fire. Everybody loves the new, sexy office buildings. B and C buildings, they're not that nice, mid-block, they're going to have a tough time. So I think that's an opportunity of change. I think, in the 50s, there was industrial buildings all over these cities. They all went out of business, and now they're lofts, right? I think that's going to come again. I think you're going to start that next year. You're going to start seeing these lesser quality buildings start to convert to residential. That's really interesting. It's an interesting opportunity that's coming. Right, and I think a lot of people are going to raise funds to do exactly that. We will as well. So that's an opportunity that's coming. But commercial, you're right. It's challenged both that rents are not rising and companies are not taking more space because they think a recession's coming. They're a little bit afraid. So the move is, I think office is not probably the place to put your bets yet. But back end of the year, I think when this stabilizes, I think that's the time to place your bets on commercial.
So talk me through the whole zombie office building becomes affordable housing. Is that something that is realistic? First of all, who pays? Because, local governments are already under fiscal pressure, and they're now losing out tax revenues because some of these offices are not getting renewed by companies. So what are the economics here? Okay,
so local government has to clear the path of the regulatory hurdles, right? The regulations in local government are outrageous. They're this thick to do anything, and they kind of constrain and restrain. So local government's got to clear the path away so that you can do it. And then the lender is the key, is Fannie and Freddie have just changed their caps, and they've set aside lots and lots of money in order to do what they call purpose lending, meaning what's their goal? To get more low-income housing. They'll give you good rates, they'll give you very high-quality loans, and they'll help get these buildings to convert. So that's where they're going to find the money. But the federal government's got to help. Fannie and Freddie have got to help.
Yeah.
And then we need local government to clear the path. I think it's coming. I think if you talk to the local mayors, they understand it and they want it to happen.
All right, one question on the Cantor business, Howard, because you guys invested so heavily in SPACs, and I have to ask you about it because SPACs have majorly underperformed and completely dried up. What is the future there?
So remember, IPOs historically have been priced 20% below what you think the company's worth. So if your company was worth $1 billion, you price the IPO at 800 to 850 so everybody makes money. Right? SPACs got so frothy that not only were they doing a 20% discount, they were trading at a 20% premium. So if you look at like the current ones, like my last deal was Rumble. And Rumble's trading right about $10 a share, raised $400 million. Well, a great company, well priced. I think SPACs will be something that will stay the course in business. All these celebrities and these ridiculous people who should have never been in this business in the first place. Look, you're going to watch them all get washed out. And pros who know what they're doing will find that SPACs is a great way to take a younger company public. You got to price it right, and it's got to be the right kind of company. But they're coming.
Right.
Just check out Rumble. It's doing great.
All right, we'll hold you to that. And finally, Howard, I wanted to ask you, about Donald Trump. You were a big fundraiser. I remember you hosting him at your place when he was president, and I was wondering, we're trying to get a sense from business whether you're backing him again in his bid to run again.
So the fun part was people asked me, how come you had Donald Trump over your house? When the President of the United States of America says, will you host a fundraiser for me? The answer is, sure. You know, I'd be delighted to have the president come over my house. If Joe Biden called me tomorrow.
Not everyone would say that to him.
I understand, but, this is America, and if Joe Biden called me tomorrow, I'd love to have him over my house. That'd be fan-friggin-tastic. But, I think Donald made a mistake with Kanye. I think he's made a mistake with all these things. So I think he's created real challenges, and he's created real challenges for me, too. I mean, why in the world doesn't he think these things through? So you know what? I've taken a step back. Plainly taking a step back.
All right, that's an answer. Howard, thank you. Appreciate it.
All right, my pleasure to see you, Sarah.
Really good to talk to you. You too. Howard Lutnick, CEO of Cantor Fitzgerald.